And the reason why, it's because normally companies go through different phases in their life. Okay. Some companies from the idea stage start off simply as a product, as an idea. Then it goes on and to sell the product, and then eventually that product gains market share and starts to ramp up in terms of scale. Okay. And then when that company is able to build that product and able to scale it, then obviously that business model, after gaining that market share, now it's more about how do you continuously make profit now from whatever you're able to build. And then obviously the last part is about the harvesting stage where growth has slowed down, but obviously margins have picked up and the business is a profitable business. And they basically just continue what they are able to achieve for the last few years. Okay. And then the end game is obviously a big challenge for a lot of companies. It's because they often go through this identity, what we call identity crisis. Okay. Now, when you're big, there's the ability to grow is always a question. And that inability for some companies to grow. So for example, like GE, they've grown for the last 120 years. Now, the last 3 years, now they're going through an identity crisis. The crisis is what's next. Okay, so normally when you're going through that end game, normally it becomes more difficult for price action to move also. Okay, so this stage here of what we normally go from the idea all the way to the latter parts of the business model, usually we characterize that as growth. And if you're trading, honestly, we normally tell people to just focus on those growth.
You have to understand, you should have an edge in your trading system. It should be higher accurate than 50% and at least 1:1 or above favorable risk reward ratio. But I follow at least 1:2 so that the trade edge is very, very powerful. And then position sizing. You have to load your truck when you get a good trade. What matters is position sizing, and George Soros says it so beautifully. One of the best traders I admire, and Soros says it is not important how many times you are right or wrong. What is more important is when you are right, how much more money you made, and when you are wrong, how much less money you lost. That matters a lot. So friends, if you can just catch these great words of George Soros, I know surely you understand the importance of position sizing. And then risk management is everything. I always say in Rudrology, even if you have an ordinary trading system, but a very powerful risk management, that is far better than a powerful trading system with an ordinary risk management. If I say only one important point which all successful traders keep in mind, that is risk management. So this is the only thing you can control, nothing else, and do control your risk and be ready to take losses, but let that losses be small. If you don't take small loss, you have to take mother of all losses.
5 rules to buying stock on the dip. So I usually use this acronym right here so that you can remember. So it's called UPARS. Not Ubers, but UPARS. Okay, rule number 1 is you have to check whether the stock is in uptrend. Your stock must be in an uptrend first. So that's the rule of number 1. Rule number 2 is you got to check the pullback or the retracement. So I'm going to use the Fibonacci retracement right here, level of 38%, 50%, and 61.8%. Okay, so I have to change this. So 38% and 61.8% is a golden ratio. So later on, I will share with you on the chart later on why I like this two level. Okay. And then number 3, pullback must be approximate around 20 or 50 days exponential moving average, EMA. So later on, I will share with you on the chart, which is exactly the area. So approximately, no need to be so exact on that area. Okay, number 4, we're going to combine this a little bit with the reversal Japanese candlestick, which is, I like this part the most. So you can, recognize which Japanese candlestick give you the chances for it to rebound or reverse. Okay, last but not least, right here, I'm going to combine with the indicator right here, which is slow stochastic. We're gonna use the oversold region. So this is the 5 rules on buying on dips. So number 1, the stock must be in an uptrend. Number 2, the pullback must be at the Fibonacci retracement level, which is 38%, 50 or 61.8%. Approximately around 20 to 50 days moving average, reversal Japanese candlestick, and slow stochastic oversold region. So let's begin with the first number 1. What does it mean by uptrend?